So the question is, are we in a recession right now? So today, we're gonna have rate cuts in the US. So let's see what's gonna happen on that as well. So as you can see in my Discord, I share this right here, guys. Recession is near with the same rules recession indicator. So this indicator always shows the recessions and the unemployment rate, right? This is the unemployment rate and it's curving upwards. So every time the unemployment rates exceed this level, right, recession hits. But then here's the thing, guys. Here's the thing. Okay. There's no label on our recession right now. Okay. So even though you can see the recession is going up, recession fears hitting it, and then we have all this unemployment rate going up, right? So what's gonna happen? So we can always look at past data and see, okay? And this is a dot-com bubble, right? Dot-com bubble at 200 and 2001 dot-com bubble, and hence a collapse. So this is what happened, guys. There's a lot of companies at the dot-com era, right? Internet era, and all these companies, right? Because everybody invest in it, but all these companies failed. They actually failed. So it causes a recession, right? Recession, and then S&P 500 down 28.2%, as you can see there. And then again, at 2008, we have the subprime mortgage. So this is where there are too much mortgages of the house loan in the US market, and they are unable to pay the loan. That's why again recession hits and everything drops, right? Even the rate cuts, right? The Fed's cuts the rates to help the economy, but still the economy goes down and down bad. There's always something behind a recession, guys. There's always something. Like recently, right, just 2021 or 2022, right? 2022 we have COVID again, right? This is a small period of time, COVID hits, a lot of unemployment, right? Unemployment skyrocketed, right? If you can see over here, this is the COVID period, right? COVID period, unemployment skyrocketed. This is the mortgage, right? This is the mortgage happens, right? Unemployment rate skyrocketed. So this all happens with something that triggers, right? It needs something to trigger. Right now, we do not have that, guys. We do not have that. And yes, the unemployment rate goes up, but still it curves down right now. And tonight, we have the rate cuts, right? Tonight, we have the rate cuts. Hence, unemployment rates will be go down even lower, right? Go down even lower. And to me, in my opinion, unemployment, right? Recession is not near yet, right? Recession is not near yet. And if you were to look at, right, this yield curve, right, 10-year versus 2-year yield curve also can indicate recessions. Now every time it curves up, right now the yield curve is inverted and it's slowly curving up. Every time it curves up, that's recession hits. But there still needs a little bit of time to curve out, right? Still need a little bit of time to curve out. And again, with the trigger events, what's the trigger event to make it recession, right? We know, right? We know all the retail money, they're looking at unemployment rate, they're in fear right now because that's why it causes right this sharp drop right here and all this drop right here. But still, we are at the all-time high, almost breaking the all-time high yet again. Okay, there's no label on this recession right now. Right? There's still no label yet. So in my opinion, there's still no recession. So let's look at this yield curve, right? This is a very strong indicator as well for the recession indicator. A 10-year yield versus a 2-year yield. If you don't understand it, I do it in ChatGPT, and I already asked ChatGPT what it means. So it is like this, guys. 10-year yield bonds always give us more rates, right? Gives us more rates. We expect more when we invest in 10-year yield. But suddenly the 2-year yield, the short term is even higher rates. Hence, it have this inverted yield curve when you plot 10 versus 2 yield. Okay, because it doesn't make sense for the short term to have more returns than the long term. Okay, generally investor demand higher yields for the long term. Okay, and if it's a negative, right, it's negative, This inversion could seem several times across a timeline. Okay, this can monitor when the historical precision economic recessions, shaded area. Okay, so the reason is because of credit conditions. Okay, the inverted yield can lead to a tighter credit condition, right? Because we have this tighter credit condition, banks pay short-term rates on deposits and receive long-term rates on loans. When these rates inverts, the profitability of lending can decrease, leading banks to reduce lending and therefore suffer economic growth. Okay. The inversion may also signal to investor or business that economic conditions are expected to worsen, leading to reduced investment and spending. Right? Typical when the curve inverts is during the period when the central banks have raised rates to combat inflation. That's what's happened right in the recent months. Right, the interest rate is at all-time high, and tonight, like September 18, 2024, is the start of Fed's cutting rates because of inflations, right? Inflations, but still we have the unemployment rate, right? Unemployment rate is going up, right? Then we have also the inflation. Let's look at the inflation right now. Okay, inflation 2.6, right? The Fed's target is 2, but still the unemployment rate is curving up, guys. The unemployment rate is curving up. That's why the Fed's mass cut rate, right? It can't wait for the inflation to go down anymore. So that's my take on the recession. So in my point of view, recession is not near yet, guys. Still not near yet. We're still very far away. Maybe a few months, but we'll see, right? And when inflation hits, when these yield curves goes up even higher, right? That's number one. Number two, right? Unemployment rate. If the unemployment rate were to keeps on going higher, okay. But right now they already cut the rate, so I don't think it's gonna go high. So we will see. And we have a trigger event for the recession. Then only we can label that this is a recession. So my point of view, we are still not close to recession, right? Still not close to recession. And if you want to hear all this news, guys, join my Discord. The Discord is right below and it's free to join right now, where we share all this alpha and share all the news regarding the market, and we can trade accordingly. Right? Join the Discord right now. I'll see you in there. Peace.